According to Goldman Sachs, the time is now ripe for dividend investing. The firm's chief U.S. equity strategist writes that with the 10-year Treasury yield at just 1.5% and the Fed likely to cut two more times this year, investors should look for opportunities in dividend stocks. So on Goldman's list of buys is AT&T. At the same time, Barron's recently announced that AT&T is among the inexpensive stocks and has a dash of price momentum. And just today, Monday, shares of AT&T jumped after activist hedge fund Elliot Management revealed a $3.2 billion stake in the company, saying the stock could double by the end of 2021. It's been a while since I last looked at AT&T, and perhaps I'm a bit late to the party. But let's do another take of snow, fire, and AT&T. AT&T is one of the highest yielding dividend stocks singled out by Goldman Sachs and Barrons. Currently, the yield is about 5.6%, which translates to an annualized payout of $2.04 per share. In comparison, the average tech stock has a dividend yield of about 0.96%. AT&T will be looking to show strength as it nears the next earnings release. The company is expected to report earnings per share of 94 cents, up 4.44% from the prior year quarter. The consensus estimate is calling for quarterly revenue of 45.45 billion, down 0.62% from the year ago period. For the full year, estimates are projecting earnings of $3.57 per share and revenues of over $182 billion, which would represent positive changes of 1.42% and 7.03% respectively from the prior year. AT&T currently has a forward PE ratio of 9.9, which represents a discount to its industry's average forward PE of 14.82. The PEG ratio is 2.24, which is consistent with the sector average. Year to date, AT&T has powered up by about 27%. According to analysts, shares may continue to grind higher over the coming months, while potential asset sales could reduce risk and help pay down debt. Overall, 6 of 8 analysts covering the stock rate AT&T as a buy right now. And we're looking at the 20-year monthly chart on AT&T, and the symbol is T. For disclosure purposes, I do not hold any shares of AT&T at this time. And the very first time we took a look at AT&T, I noted some of the patterns to you. It looks like things may change, but we'll get to that here in a moment. But going back, you can see that there was kind of a double top there. It wasn't exactly, but then we had the downturn, the consolidation, and then the run up. Another double top, kind of. Downturn, consolidation, then run up, double top, downturn, consolidation, and run up, double top. The downturn, the consolidation is pretty short here, and so that may be changing the pattern for AT&T. We'll just have to watch, but had that consolidation, and now it's on its run. Now, if you want to take a look at the oscillators here, you can see that the bottom was set there in late 2018, early 2019 at that point, and then the fast line bounced off of that -2 and moved on through the slow line, heading on up to that 0 line, so it's gaining strength. The histogram shows the same thing with that nice base and then the swing on up. Same thing to the price rate of change, nice base, consolidation, and upward swing above that 0 line. See the same thing there in relative strength index. We're at 72.07, and by the past patterns, we still have more to go. Going down here into stochastics, same thing. Nice consolidation bottom and upward move. The volume looks fine, and then the Williams is already up in that overbought territory, but I think it can stay up there while it does some sawtoothing. So we're just in the initial stages of the move, in my humble opinion. Moving back on up to the price chart, you can see that in the past, recent past, we got up to the upper 40s, and I would imagine the close on Monday at $36.79 that we probably do have room to go up to those points, and we'll be looking at it at that point in time, at least Snowfire will, to see if we exceed those levels and head on up above 45 and perhaps even higher. But right now, everything looks very good. I like the articles that are hitting the news, and that's going to provide additional power for AT&T to keep moving. And so for today, that's ChewDog Charts. Thank you.